Hey everybody, it's Cody Hoelscher here with the Solomon Group at Coldwell Banker Action, and welcome to this week's episode of the Real Wasa's Real Estate Show and Podcast. Today's episode is a really interesting one. It's on 2-1 mortgage buydowns. So, as everybody knows, right now interest rates are significantly higher than they were at the beginning of the year. If you went and you got a pre-approval letter and bought a home January, February, maybe even early March of this year, the rate that you got was probably somewhere between 3.5% and 4.5%. Over the course of the last month, we have been between 6.5% and even 7%, and it's steadily gone up since early March. So obviously, that interest rate has a tremendous impact on your monthly payment. If you were buying at that 3.5% interest rate and today's rate is 7.5% or 7%, it's going to affect your monthly payment drastically. And so in response to this, a lot of lenders have been, pushing different programs from adjustable rate mortgages, first-time homebuyer programs, etc., to try and help those out who do have to buy a home right now, whether it be a first-time home buyer, somebody moving to the area, or if somebody's just buying a home in general. Obviously, lenders want to help people out and offer different programs, to help buyers because the interest rates have gone up so much. One of the options that lenders are kind of starting to push, especially in the bigger cities, big markets especially, are 2-1 mortgage buydowns. Now, in short, what a 2-1 mortgage buydown is it's an offer, a concession provided by either the seller or, if you're buying a new home, the builder, to where the first 2 years of your mortgage are at a discounted rate. And 2-1 in this case would be 2% the first year on your interest rate and 1% the second year on your interest rate. So think of it this way. Let's say that you're buying a home and the amount that you're financing on that home, the loan amount, is $400,000. The purchase amount could be bigger, but it depends on how much you put down. But let's just say again that the loan amount is $400,000. Let's assume that your rate that you were quoted by your lender was 7.25%. So with that 2-1 buydown, the first year, your interest rate would be 5.25%. Now, without that, just with your 7.25% rate, your payment and interest alone would be $2,729. Now, you take off that 2% and you get down to that 5.25% rate the first year, your monthly payment would be $2,209. So that's a significant amount of money that you save right there. That's basically $500 less per month for the first 12 months you own that home. The second year would be 1% discount, so you'd be getting that rate of 6.25%, and your monthly payment would still be lower, obviously. It would be $2,463. So, with that being said, your first 2 years, you're saving $9,432 just on interest alone, which is phenomenal. Now, again, it's important to remember that this is considered a concession, so it has to be provided by either the seller, in the case of buying a new home, the builder. But the big point of it is it's a really good option right now if you're looking to buy a home and you're like, oh man, this interest rate of 7% or whatever it might be when you go to look, if you're thinking it's too high, it's a really good option. And lenders in general, from what we are hearing on a national level and also the lenders that we talk to on almost a daily basis, the general consensus is they believe that interest rates will begin to go down, whether at some point later this year, next year, the following year. Timing, obviously, nobody can guarantee. But generally speaking, people do think that the interest rates are going to go down and settle down below what they are today. And so with that being said, you always have the option of refinancing. And if you're in a position where you can get one of these 2-1 buy-down mortgages and save that interest and only pay 6% your first year and 5% your, flip-flop that, excuse me. If you have to pay 5% your first year and 6% your second year, pay the higher interest rate for a year or two after that, but then you can refinance back down to a lower rate, 4 or 5% maybe, it puts you in a really good position, actually. So that's pretty much it on the mortgage buydowns. If you're interested in learning more about this specific subject, I highly recommend that you reach out to a lender. I know a lot of lenders in town are more than happy to talk to buyers or just people who are curious about, what different programs are available right now to save you money as a buyer. And so I'd highly recommend to reach out to a lender if you have more specific questions. But other than that, that's going to wrap up this week's episode of the Real Wausau's Real Estate Podcast. And hey, if you guys ever have any questions on specific topics or just general questions, we'd love to hear it. Visit our website at thesolomongroupwi.com and drop us a line, and we'll catch you guys on the next episode.